Welcome to the IRS Solution Attorney Show. If you have problems with the IRS, don't focus on the negative, focus on the solutions. With the IRS Solution Attorney, Darrin T. Mish. For over 15 years, he's been helping taxpayers with IRS problems reclaim their lives and their financial stability. Now, here's your host of the IRS Solution Attorney Show, Darrin T. Mish.
Welcome. That would be me, the IRS Solution Attorney, Darrin T. Mish.
And I'm your co-host, Katrina Madewell. Welcome to the show on this not-so-beautiful Thursday morning.
If anyone has ever doubted our dedication to our craft here on Thursday mornings,
today was a process.
Today is an example of how dedicated we are to bring this amazing information about how to deal with IRS problems to you,
and
our listening
also
audience.
The first two hosts that I've ever seen in that room in wetsuits.
Yes, that is true. We almost missed the rain by like 5 minutes, but today we did not. And it's funny because that day that I was late, Darrin, and we had guests in the studio that day, and you were on time, but I wasn't. Traffic was way worse for me that day than today.
So, for those of you who don't know what we're talking about, there's terrible weather. It's raining. It's storming. There's accidents all over the Tampa Bay area.
Every corner.
It took me an hour and 45 minutes to go 40 miles. And I listen to a lot of talk radio, and never once before today have I ever thought about those people on the other end of the mic are real people that probably
have to drive to a studio
probably
somewhere.
Have troubles getting to work from time to time, and you can never tell because they don't talk about it. Like we are right now.
We're live.
And they just come across as perfect. So I have a lot of admiration for those
we have
guys.
a lot of listeners, and I had Land O'Lakes Winery on my show last week, and so we had some people join us in the winery, which was really cool. And they mentioned not only the show, Darrin, but they mentioned the show with you, and they heard a lot of things, including the first one where I was late and the one where I was late for you. The only 2 times I've ever been late, by the way. But
wow, that's really cool.
They were doozies.
Well, speaking of the winery, how was it?
It was fabulous.
How
We're
much do you
going back
remember?
in 2 weeks and again in 6 weeks. Well, we left before I wanted to, but my team was ready to go, so I left.
I was going to go on Sunday, and my wife said, no, let's just stay home.
I'll have to take Darrin and Pat. You guys will hang out
Yes,
longer.
we'll go
I know
together.
you will.
Yeah.
Sounds good.
You'll come from one end, and I'll come from the other.
They-
and
Right.
we'll meet in the middle there.
They said the bottling is the most fun process. That's my cell phone, by the way. Sorry
You're getting
about
calls
that.
already? You didn't even talk about what the subject is, and you're getting calls.
Well, I usually always get calls. I just normally mute my phone, but
Well, talking about that weather coming in this morning, I was on the Howard Franklin Bridge at 5 a.m., and I could see the Courtney Campbell Causeway, and all of a sudden it disappeared. All the lights went out, everything went black, and I said, oh, this is not good. And when I got on top of the hump, it started sprinkling, and I got at the bottom of the hump. You could only see one light standard in front of you, and it was complete washout.
were there street lights or?
Yeah, the street lights were gone because the weather was so heavy coming in at 5 o'clock this morning. It's the first band that came off the coast area, and then it is from the rain really now from now it's from Spring Hill to Sarasota, and it just keeps coming in bands. I didn't think we had Hurricane Earl anywhere close.
Is that from a storm that's out in the Gulf?
I don't know.
I don't watch the weather very much.
I don't know. We have a high pressure system over us, so I guess this is rain. That
We
couldn't
have
make it
something
down
out
by
this
that.
window. I'm looking at it. I'm glad we're in here and not out there.
All right. Well, sorry we blew up there, Darrin.
That's all right. You know, the weather is important around here.
We know our outline's a little thin this morning, so if you want to talk about something else, just let us know. 888-404-1010. Pat, I'll keep you updated on the weather here during the breaks. And today's topic is, what is the difference between tax avoidance and tax evasion? Pretty good question.
The reason I wanted to talk about this today is because people confuse these two terms all the time. So
let me take a stab at it. Tax avoidance, I would presume, is like just failure to pay or file, and tax evasion is like, I don't know, crooked stuff. That's what I think.
So you've learned a lot over the course of the last year doing this
In
show.
non-lawyer terms, by the way.
But you didn't get that right. So
See, that's why you're here. I totally would have jacked the show up today. You've been calling.
According to the IRS's official definition, tax avoidance is an action taken to lessen tax liability and minimize after-tax income. So tax avoidance is legal, and tax evasion is not
You
legal.
just don't pay at all.
We know that tax evasion isn't legal because, Al Capone went to prison for tax evasion. The Treasury agents are the ones that actually took him down because I guess the theory in that case was they were bootlegging and they weren't paying taxes on the liquor, I guess, or I guess liquor was illegal back then. But anyway,
Yes.
It had something to do with tax evasion and not properly reporting his ill-gotten gains and paying the appropriate tax on those. But the IRS's definition of tax evasion is the failure to pay or a deliberate underpayment of taxes. So we can talk about some,
Well, that could be a
different
pretty
scenarios.
broad spectrum when you say a deliberate underpayment of taxes. Like that could be anything.
Yeah, it's usually in the reporting sort of a standard. So it's not my typical client who files a tax return that's more or less basically accurate and then doesn't pay. That's not necessarily tax evasion, unless there's a long pattern, I think, of doing that. And even then, such prosecutions would be really rare. You typically have to, the tax evasion cases that I've seen kind of that go along those lines are people who are really, really wealthy, and then they also are funneling money off into different places, basically hiding the money. They had the ability to pay the taxes, they just didn't.
So they avoiding huge lump sums, or are they just pretty much not filing?
Well, the failure, we've talked about this a lot, in that is that the failure to file is not tax evasion. It's just a separate offense. There's a separate federal misdemeanor for federal failure to file. But tax evasion is more of the deliberate
Big time
act of failure to pay. So
Gotcha.
So there's some really good quotes from a judge named Learned Hand, and he's actually the judge who has the best name in history as far as I'm concerned. His name is Learned Hand. I mean, that's amazing.
Learned Hand. H-A-N-D?
Yeah.
That's a different name.
So he was real well known.
That's a good judge name, actually.
Exactly. I actually have a buddy who's a lawyer, and his son is named Justice. His name is Justice Tillman.
Oh,
and I'm always
my
wondering,
gosh.
if Justice becomes a lawyer and then someday becomes a judge, then his name would be Judge Justice Tillman. Okay, that's kind of interesting. But what if he becomes a Supreme Court justice? Justice Tillman. Kind of interesting.
I don't know. I think I probably would change my name at that point. I don't know about you.
So Learned Hand said in this really famous case called Gregory versus Helvering in 1934, he said, anyone may so arrange his affairs that his taxes shall be as low as possible. He is not bound to choose that pattern which will best pay the treasury. There is not even a patriotic duty to increase one's taxes.
Wow. Okay, say that again, because that was really a mouthful, and that's a lot to take in.
Okay,
but
so
that's pretty good.
Anyone may so arrange his affairs that his taxes shall be as low as possible. I like that. Mm-hmm. He is not bound to choose that pattern which will best pay the treasury, and there is not even a patriotic duty to increase one's taxes.
Okay, so I'm hearing that in the way I'm hearing it. It says pay taxes as long as you're paying taxes.
Well, what he's saying is...
But you don't have to pay the most taxes.
Yeah, he's basically saying it's perfectly legal, moral, and acceptable to arrange your financial affairs such that you pay less tax legally. Okay? So let's think of some examples. You're in the real estate business, right? And don't high-income individuals sometimes come to you and say, I need to buy a bigger house. And you say, well, you only have, there's only a husband and wife. Why do you need a bigger house? I need the home mortgage interest deduction.
Actually, we're not really allowed to ask that, so I wouldn't, but we would start a lot more in-depth questions. But yes, we've gotten that. It seems like
sometimes people would volunteer that kind of information.
Yes, it's a lot less of a reason now than it used to be because the interest rates are so low.
Yeah, and there's also the alternative minimum tax, and there's things like that. But that's one of the last sort of big tax deductions that just pretty much normal everyday people can get.
Which they've been talking for a long time now about doing away with. And NAR, which is National Association of Realtors, has actually been lobbying very, very heavily to make sure that homeowners continue to get that deduction.
If they do away with that deduction, there will be people in Washington with pitchforks.
Well, there's a lot of stuff that goes on behind the scenes. You know that. And sometimes stuff passes before the layperson realize what happened.
Yeah, that's one of the biggest problems facing America today.
Agreed.
Is that the elite from both sides actually just kind of meet in back rooms and decides what's best for them.
Right.
And the heck with the rest of us.
They write up this 900-page bill that hurry up and get signed, and then the next thing you know, somebody breaks that down in lay terms and go, yeah, this is what it means to you.
A very famous political politician here in the United States once said, we have to pass it to find out what's in it. And
Isn't that ridiculous?
And that's what's happening over and over, is that these politicians don't read the bills that they're voting on. And
some political nerd did, and
then not only that, the bill gets passed, and then it becomes the executive branch's decision to write all those regulations to enforce the law, and those regulations aren't even really law, but they're treated as law for all intents and purposes. So that happens a lot in the tax realm.
I think before anything like that passes and goes through like Supreme Court justice system, that kind of stuff, Congress, I think there should be somebody that their sole job is to interpret what that says, read it, and give not only people voting on it, the short and skinny, but the public people. Those should be like public access views.
I think every bill should have a one-paragraph, simple summary, and we all ought to be able to look at it before they vote.
Absolutely. So this morning we are talking about the difference between tax avoidance, tax evasion, and a whole bunch of other really cool things in between. We'll share some stories with you. We've got some questions that people have left on Twitter at Darrin_Mish, and you can call in if you have any kind of tax IRS sort of related question. Yes, you can be Don Joe or Mary Sue Joe Smith, whatever you want to be. 888-404-1010, 888-404-1010. We'll be back in a minute.
Are you suffering from IRS problems? Do you owe back taxes you can't pay? Is your paycheck or bank account being levied? Or maybe you haven't filed tax returns in years and simply don't know what to do. This is Darrin T. Mish to tell you that if you're tired of IRS problems hanging over your head and are ready for a fresh start, we may be able to help. Call the law offices of Darrin T. Mish at 888-GET-MISH. 888-GET-MISH. I can help you file old tax returns, work to release tax liens or stop wage levies, even negotiate deals to pay off back taxes at a discount, sometimes for pennies on the dollar. Hey, let's face it, these days it's not hard to get into tax trouble. A divorce, failed business, health problems, you name it. The point is, IRS problems may be solved if you're willing to take the first step. Call for a free consultation at 888-GET-MISH. That's 888-438-6474. Or go to the web at getirshelp.com, because the one sure thing is, IRS problems don't solve themselves. So get Mish. 888-438-6474. Principal Office, Tampa.
Welcome back to the IRS Solution Attorney Show. I'm your host, the IRS Solution Attorney, Darrin T. Mish.
And I'm your co-host, Katrina Madewell. Thanks for sticking with us. I hope you all are safe out there today because the traffic is awful. So be careful, pay attention, 2 hands on the wheel, don't get on the phone, listen to the radio.
Make sure to text as often as possible.
No.
Facebook is good, too.
If you're at a red light only, you can call us, 888-404-1010. We want you to be safe.
Use all hands-free devices at all times. Both eyes on the road.
Exactly.
Not one eye looking at your phone, one eye looking out the window.
Have Bluetooth.
How many people do you see driving down the road and they're totally on their cell phone? Not talking on their phone. That's kind of acceptable. But just tapping on the thing. I see it all the time.
Yeah. Well, I was looking at my traffic map this morning because, my Bluetooth doesn't show all that. So I was looking at my traffic map.
I think we got Agatha on the phone.
Okay, great.
Hold on. Welcome to the IRS Solution Attorney Show.
Hi, what happens if you don't pay taxes?
Uh-oh. We have one out of school. What was the question?
What happens if you don't pay taxes?
Well, Agatha, that's a really good question. Sometimes if you don't pay taxes, if it's not intentional, I would say, then there's various programs that you can work it out with the IRS where you can make a deal to settle for less. For example, if you owed $100,000, you might be able to settle it for $50,000 or something along those lines. But if you don't pay taxes because you just don't want to, you have the ability to, and you just don't want to, then that's tax evasion, and you could actually go to prison for that, and you can be punished very severely. So that's the topic of the show. So that was a really good question from Agatha, and I'm surprised that a youngster, of that apparent age is listening to us. That's great.
Me too, and they got the phone number.
Yeah.
I'm surprised we're not Pokemoning. I guess the rain maybe is scaring the Pokemon away.
Yeah, we're stuck indoors today, perhaps. So anyway, tax evasion is a federal felony. It's punishable by imprisonment of up to 5 years and up to $100,000 fine. It's $500,000 if it's a corporation. And I want to talk about the elements. There's 3 elements of tax evasion. I want to talk about them real quick because I think there's a lot more tax evasion going on in our society than we really think about or we care to admit. And then I'll give you an example, okay?
Okay, good. Examples and stories are good.
So the first element, and in most all statutes are comprised, or at least crimes, are comprised of elements. So you have to meet all of the elements of the crime before that crime has actually been committed. If one of the elements is missing, it is not a crime, okay? So in this case, there's 3 elements, and the first is the unpaid tax liability does exist. So all that means is you owe the money. Mm-hmm. It does exist, okay? Number 2, the defendant took specific actions to evade or in an attempt to evade paying a tax. So they were trying to evade, not avoid, evade paying the tax.
Okay.
And then number 3, the defendant had a specific intent to evade his legal duty to pay a tax. So we got into some legalese there. Specific intent means something in the law special, and we went to law school and we argued about it for a semester. But so specific intent essentially means you did in fact intend to commit the offense. Okay.
Intentionally meant to not pay your taxes.
Mm-hmm. So you can't accidentally evade tax, commit tax evasion. It can't be done.
Okay.
So let me give you an example. You're a server at a popular restaurant, and you're earning on average $200 a night in tips, and the employer either doesn't keep track of servers' tips or just takes. I think right now they're saying 8%. I think that's a standard in the industry, and the server doesn't report the actual tip amount. That's actually technically tax evasion.
Okay.
And that happens across our society in what we call the underground economy, right? So
Any cash business?
No, I wouldn't say any cash business.
Most cash businesses probably are more susceptible to that. I
would say they're more susceptible, for sure. And examples that come to mind are, let's say you need some minor handyman work done at your house, and you call a guy off of Craigslist, and the guy just kind of shows up, and he has a pickup truck, and he has some hand tools, but he doesn't have a uniform. There's nothing on there's no name of a business on the truck, and then he does the work, and it's $200, and you ask him, well, how can I pay you? And he says cash, and he takes it $200 and he puts it in his pocket. You get no receipt. That's probably pretty clearly somebody who's not going to report that income, you think?
I don't know. I mean, that could be construed many ways, don't you think? I
think the odds in my little example there are pretty high that he's not going to be paying taxes on that.
But theoretically speaking, how do you know, that's not a friend and you gave him some money for helping you out, right? Is that still tax evasion?
I'm not actually commenting on the person who paid the person. I'm commenting on the person receiving the money. Yeah. Okay. So that goes on in the construction trades a lot.
Can you imagine if they had to start issuing W-9s for every single $40?
Oh, the government would love that. I mean, that's what they're wanting us to do. And the state of Florida is even worse on sales tax. You can commit sales tax evasion as well. If you think about it, that happens a lot too. Where, in fact, I have a lawyer friend of mine who actually specializes in nothing but sales tax, cases. And there are some businesses, particularly where they're not using a cash register, like a flea market business. What comes to mind, right? You're at the flea market and you decide you're going to buy something, and it's not a food item. It's definitely a taxable item, and you say, how much is that? They say $7. You hand them $7. There's no receipt,
right,
and you walk away. I mean, that's somebody who's probably not paying Florida sales tax. It's the same sort of concept.
So, what else I think about too, and this may or may not be built into it, but I'm just curious at what it might look like from the backside of the corporation. But what about the vending machines and that kind of stuff, where they put it in? Because technically they would need to pay taxes on that, right? And it's you're putting $1 in to get a snack. Are they paying taxes on that? How does all that get calculated? Well,
I think in our state, in Florida, food items are not subject to sales tax, so I don't think that would apply. But let's imagine a vending machine. Back in the day when there were cigarette machines,
yeah,
those would clearly be taxable at some point in the stream. I'm not sure if tobacco taxes are paid with that little seal that goes over the top.
At this point in day, even if you go to the airport, you'll have all kinds of stuff in vending machines.
Yeah, I think that most vending machines nowadays are, they're basically computers. And so they're probably calculating the sales tax. Sometimes what happens is the actual price of the item is 7% lower. And so basically the seller is just incorporating that all into the price and taking care of their sales tax like that. But one of the big concepts that I want to stress today is that tax evasion is different than making a mistake. I mean, mistakes are made on tax returns every day of the week, every day of the year here in the United States. So there's a difference. I don't want people listening to think that I'm saying that they're all committing tax evasion, because they're certainly not. If there's an honest mistake on your tax return, then it's going to be considered that you're going to be subject to probably what's called a negligence penalty, which is only 25%. I mean, it's still high and significant, but it's a lot different than tax evasion, which could send you to prison. So,
which is your client's number one fear most of the time.
Yeah, I think that most of my non-filer clients are afraid that their non-filing sort of behavior is, evidence of tax evasion.
So that's not tax evasion just because they didn't file?
I think
It has to be more like intentional, like I filed and left a whole bunch of stuff off. That's more tax evasion?
Well, I think a non-filer technically could be prosecuted in certain circumstances under the tax evasion statute. I think it could happen, but there are so many non-filers in the United States, we'd go bankrupt housing all those people in prison.
So like I forget the guy's name. He advertised and promoted the late night infomercial, like taxes are unconstitutional. You know what I'm talking about? The guy, I think he ended up going to jail. He sold a whole bunch of like CD kits. You know what I'm talking about?
I do. Erwin Schiff was his name. And Erwin Schiff is in prison, actually.
I was thinking like Carlton something, but whatever.
Carlton Sheets was not a tax guy. No.
He was anyway. You know what I'm talking about. The guy that was like, oh, it's unconstitutional. You don't pay taxes. We can show you how. There's loopholes.
Yeah, and that's
considered tax evasion, right?
And what we're trying to talk about today here on the show is the difference between legal tax avoidance, which is setting up your affairs, like Judge Learned had said, setting up your affairs such that you pay legally less tax is fine, but setting up your affairs so that you pay no tax because you don't think the system is right or just or legal, that's tax evasion. Okay, so there is a difference, and Mr. Schiff is actually serving a sentence of, I believe, 13 years. Actually, he's passed away, but he was serving a sentence of 13 years when he died on October 16, 2015. So that was a guy that basically, I have nothing bad to say about him. I do believe that he, as a tax protester, believed everything he was saying with every fiber of his being. He
just thought it was unconstitutional to pay taxes.
He committed his life to that cause. And I have some respect for the fact that he never wavered. I don't think he was a crook in terms of
his belief
of his beliefs. It just so happened his beliefs were against the statutes passed at the time.
It's not the way the law interprets the beliefs, unfortunately.
Well, one of the challenges that tax protesters have, I think, as a movement, is that there's a real practical need that we have as a society for tax revenue. The federal government is a beast. It's growing every day. It needs money. And if a judge were to find that income tax was unconstitutional and therefore illegal, our entire society would really have significant problems.
Not be as we know it, that's for sure.
Exactly.
You're listening to the IRS Solution Attorney Show. We are giving you some examples today of tax avoidance versus tax evasion. And we talked a lot about tax evasion the first half. When we come back, we're going to give you some ideas and some thoughts on legal tax avoidance, and then we'll answer some questions. You're welcome to call us. We're live in this nasty weather day. 888-404-1010, 888-404-1010. If you even just want to say hi or tell us about traffic, we're here. Back in a minute.
Welcome back to the IRS Solution Attorney Show. I'm your host, the IRS Solution Attorney, Darrin T. Mish. Today we're talking about...
Co-host, I'm back. Katrina Madewell. Actually ran out in the hall real fast.
Today we're talking about the difference between tax avoidance and tax evasion. We've given you some examples and some definitions of what tax evasion is. Tax evasion is a crime, and it basically consists of taking actions to unlawfully avoid paying taxes. Tax avoidance is kind of the opposite. It's the lawful avoidance of paying taxes. And we talked about Judge Learned Hand's famous quote where he basically says, taxpayers are under no obligation to pay more taxes than legally, minimally necessary.
Obligated.
Yeah, actually, or absolutely. So we talked about in tax avoidance how people get the home mortgage interest deduction, then that allows them to legally avoid paying more taxes than they should. There's some other issues that come up as well. Some that come to mind is, if you're a small business owner and you have a sub S corporation, for example. It's a little bit different than being a sole proprietor. A sole proprietorship is what happens if you just decide, I'm going to hang a shingle and I'm going to start a business. Like my handyman example, for example,
Right.
The guy puts up ads on Craigslist and he just decides he's going to go do odd jobs for people. That would be a sole proprietorship, and his taxes would be generally a little bit higher than typical because he has to pay what's called self-employment tax. Self-employment tax is just both halves of the Social Security tax that we as employees pay.
But it's not uncommon for somebody to start there to see if they can even make the business a go.
Absolutely. It's totally normal, not always advisable, but very, very typical for people to start out as sole proprietors.
Because they can always change later.
Absolutely. So then the next sort of tax avoidance strategy in that scenario would be to form yourself a sub-S corporation or an S corp. An S corp is typically for smaller businesses, and they can have a limited number of members, but you use an S corp because you have it's called a pass-through entity. So the corporation doesn't pay separate taxes. All of the profit passes through to the shareholders, and then the shareholders pay taxes on that money. So far, so good? Mm-hmm. Got what I'm saying?
Got it.
Okay, so in an S corp, what happens is the shareholders are supposed to take a reasonable salary. Now, lawyers since the beginning of time have argued over what the word reasonable means. And I would say in this context, the word reasonable means what somebody in some private sector or government job doing the same job that you're doing would make. Okay? So.
And by the way, too, you can also do an LLC and elect to be taxed as a corporation.
Absolutely.
And get those same benefits.
Absolutely. I'm not a huge fan of the LLC as a device for most small business owners, but there's much less case law. There's some bad case law in Florida with regard to, single or married couple member, LLCs. But you're right. They can be taxed as S corps as well. So in my example, you have to pay yourself a reasonable salary, and then the rest of your compensation you can take out in the form of distributions, and those distributions are not subject to Social Security tax or self-employment tax. So let me give you an example. Let's say a person has $100,000 basically compensation from their S corp. They could take $40,000 as reasonable salary and $60,000 as distribution. That $60,000 is going to be taxed at a lower rate than the $40,000, and that would be the example of a tax avoidance strategy that's perfectly legal, reasonable, assuming the $40,000.
Right. And that's the reason why most corporations actually are such.
Yeah. Yeah. Well, at least small business corporations.
Right.
That's one of the reasons why most of the small businesses in America are S corps because of that tax, avoidance strategy and that tax avoidance benefit that we get from becoming corporations.
Right.
And there's legal reasons in terms of liability limitations and things like that we form corporations as well.
And I think we have a question on our topic from Chrissy. Let me patch her in.
Hey, Chrissy.
Hi, Darrin. Hi, Katrina. How are you?
Good. Welcome to the show.
I have a question for y'all. Say that I have evaded my taxes for 20 years, okay, and I am on the run and I'm hiding out. What do you think is going to happen to me when they catch up with me?
Well, we talked about...
This is your average client, Darrin.
Chrissy, we talked about the maximum penalty was up to 5 years in prison and up to a $100,000 fine. But that's just the maximum, okay? So, so you're on the run.
Hiding out from them, you know what I mean?
Yeah.
What kind of taxes?
Give me an idea what kind of money you've been earning.
Nothing on the books astronomical.
Okay, so you're kind of living hand to mouth. Is that what you're saying?
Kind of, but not really.
Okay.
Any rough dollar figure annually?
Rough dollar figure annually, probably about $80,000.
Okay.
But most of it's not on the books.
Okay. And do you are you interested in just staying off the books, or do you want to avoid the potential of being prosecuted for tax evasion?
Well, I'm saying to avoid it, exactly.
So you want to avoid, you don't want to get in trouble, but you'd like this to end. Is that what you're saying?
Right. But on the books, $80,000 usually. But on the books, probably maybe 30,000, 25 to 30,000.
Are you filing tax returns?
No, because I don't work.
Okay. So it's kind of hard to give specific legal advice here on the air, but I would say
I also get a widow's pension, a widow's Social Security.
Okay.
And most of my money that comes in is cash.
Okay. So, technically the correct answer is you should start filing tax returns, report that cash, and just kind of, move on with life.
Well, I'm 60 years old, okay?
Mm-hmm.
I will be 61 very soon.
Mm-hmm.
And actually, I haven't worked on the books, per se, in probably 3 or 4 years, I guess. My dad passed away a few years ago, and I haven't worked literally on the books. And what my dad left me, I invested in property for my children.
Okay.
So what I have coming in is like my rent and stuff from my properties, but they usually come to me in cash.
So you own these properties, and you're getting rentals in cash, and those rental collections are not ending up on a tax return. Is that what you're kind of saying?
Yes, I am.
Okay. So what I would suggest is you go back and amend the returns for the past 3 or 4 years and get that straight.
Any returns, is what she
if
said.
there haven't been any returns, then we need to get some returns. I'd say going back at least 6 years and get those. Get that all worked out and straightened out, and then you could sleep better at night and know that you're not going to be prosecuted for tax evasion.
Is there an age
What
or...
I make off the books, I do not have to show, right?
Well,
That's what we were talking about with regards to tax evasion versus tax avoidance.
well, the law
that's
says you have
evasion,
to.
But show me where I got that cash. You can't prove where I got that cash, okay? You know what I mean?
Yeah, if the IRS were to audit you, they have some pretty sophisticated methods for figuring out where the cash came from, and they can also do what's called a lifestyle audit. So they can see, based on your lifestyle, that your income is not as little as what you were reporting.
It's not enough to support what you're doing.
My actual income that I get monthly that shows on the books is my husband's
Retirement? Okay.
It says security because he didn't get retirement. He didn't make it to his.
Hey, Chrissy, you've been on the line too long. I think they're probably trying to track you right now. I'd hang up if I were you.
Well, they're not going to get me, I promise. Okay, I'm hidden.
Oh my God.
Well, so the basic answer is if you have income from any source, an American is supposed to end up on a tax return, and you're supposed to pay taxes for it. I understand the vernacular, the way you're phrasing it, that you don't have to show it, but under the law, you have to report it on your tax return.
In actuality, because I've only got rent from the one property that has been cash. That's the only one that I really have to show right now, right?
Well, I mean, you don't know without looking at everything, but basically that's what you're describing is tax evasion versus tax avoidance. Is that correct, Darrin?
Yeah.
Okay.
So buying the rental house to take the depreciation to reduce your overall tax liability, that's tax avoidance. Not reporting the rentals on your tax return, that's tax evasion.
Right.
That's tax evasion. So there's the difference. That this is not a stage call. That is a perfect textbook example of the difference. So I'm not running you down. I'm not saying anything bad about you. I'm just saying that the way you're handling your affairs right now is not technically correct.
And when they catch up to you, you can call Darrin at 888-GET-MISH. 888-GET-MISH.
Number.
Chrissy.
I do have Darrin's number, by the way.
That's great. Chrissy, thanks for calling in today.
I may call you in meetings, okay?
Thank you.
Sounds great.
Thanks for your time. I appreciate it. You guys have a great day.
So
You too.
the next part of our show is going to be talking about the legal ways you can do tax avoidance. But thank you for the call.
Well, that would be an example. I mean, she just came up with a really great contemporaneous, spontaneous example, and that would be, the depreciation from a rental property is a pretty good tax.
Any repairs, any management.
Yeah, all those things are all taxes. Deductions. But the failure to report the income from the rental because you're getting in cash is not a great example.
Right.
Which
you're going to get some deduction, but they want you to pay some taxes on that income.
Yeah, absolutely. A lot of times in the rental scenario, people get confused. They think that they take the rental and then they want to deduct the mortgage payment itself, and that's not necessarily how it works.
Now, is there a minimum amount of income you have to even file, or is it any amount of income?
Yes, there is a minimum.
That's an on-the-fly question that he was totally unprepared for, but I asked it anyway.
I know that if you're self-employed and you get a 1099, the minimum is $600 or more you have to file. And for taxpayers, it's a little bit different. There's a whole bunch of different variations here, but you can basically think of it as $20,000 or so in wages you have to file.
So in that scenario for the rental income?
Oh, you're going to have to report the rental income, period.
Okay.
So, yeah, she's not doing some things right. And that was actually a really interesting example of how Americans look at this. I mean, she kept saying, I get asked this question all the time, do I have to, quote, show that income? And that's even the phrase that people use. Do I have to show the income? Yeah. You do. That's the short answer. Yes, you have to show your cash income. It has to end up on a tax return.
Well, technically, you should be filing that one way or the other, whether you have a vacant property that's not being rented, correct?
Well,
and you take your loss on your expenses, or it's the balance of the two.
Yeah, and there's a whole bunch of rules pertaining to the rentals and how much time do you use it and things like that. You know, beach rentals are famous for being vacant most of the year because people want to use them most of the year. I think the rule is 2 weeks or less in personal use, something like that.
Not sure about that one at all. But you're listening to the IRS Solution Attorney Show. It has been a wild day, weather and a wild day for questions, but we love them. Bring them on. 888-404-1010, 888-404-1010 if you want Darrin off air. He's 888-GET-MISH. That's
888-438-6474. 888-438-6474.
888-GET-MISH. When we come back in a minute, we're going to answer some questions that we got on Twitter at Darrin_Mish, M-I-S-H. We'll be back in a minute. H. Bye. We'll be back.
Welcome back to the IRS Solution Attorney Show. I'm the IRS Solution Attorney, Darrin T. Mish.
And I'm your co-host, Katrina Madewell. We got Pat George back there on the board, keeping you guys abreast of traffic and weather and all that beautiful stuff out there today.
Today has been sort of an interesting show. Had a nice caller, Chrissy, who called in and gave us a perfect example of the difference between tax avoidance and tax evasion. I think we have a couple questions that we got on Twitter this week.
We did. The first one is going to be, how do I notify the IRS my address has changed? And that's from Rick in Tampa.
Well, for most people who file tax returns on a regular basis, if you put a new address on your tax return, that is automatically going to change your address for IRS tax purposes. However, if you're one of my typical clients who hasn't filed a tax return in years, and you want the IRS to know your current address, which is often a good idea for them to know what your current address is, because trust me, you're not hiding just because they can't locate your physical person. You file a Form 8822 with the IRS, and I would suggest that you send it in certified mail so that you can prove that they got it. It's a Form 8822. And the reason why, if you were a non-filer, you would want the IRS to know of your last known address is if they prepare what are known as substitute for returns, that's a return that they prepare for you because you didn't prepare one. And it's going to be high. It's going to be much higher than appropriate. Then they're going to issue you something called a notice of deficiency, and that's going to give you an opportunity to dispute that, to fight it. If you don't get that notice of deficiency, but if the IRS sent it to the last known address, that's good enough, and they're going to go ahead and move on. They're going to roll on.
So are you saying if you don't file, you want to file Form 8822, but if you do file, they're going to get it automatically from your return?
Exactly.
Okay.
That's basically the bottom line right there. Or sometimes you might be filing and you might move mid-year, and then you might still want the IRS to know about your new address in case maybe you have something that's pending with them and you're expecting mail. You want to make sure that they have your current address. Now, there's a big scandal with the IRS, and that is that they don't have time to update these change of addresses from the 8822, so it may or may not even work. But the reason why I want you to send it in certified mail is at least you can prove that you made the attempt to get them to change your address.
And Ken has a great question too, which we have answered this before, but it's a very, very good question. He wants to know, is there an age limit on claiming my child as a dependent?
Well, generally speaking, your child has to be under the age of 19, or if a full-time student, under the age of 24. If your child is permanently and totally disabled, then there's no age limit whatsoever. So it's 19 unless they're a full-time student, then it becomes 24. If they're totally and permanently disabled, there's no age limit whatsoever.
And that's going to say disability, and then college, all that jazz, right?
Right.
Any dependent, like you're still paying their bills, taking care of them, kind of thing.
Right. I think I was pretty much a dependent until I was about 26. But I did go to law school.
You were an attorney. You had major student loans that went with that. So our story headline, really quick, before we go to the train wreck of the week, is Facebook might owe the IRS as much as $5 billion in back taxes. Great story.
Yeah. So even Facebook, this was I believe a Washington Post story. Facebook confirmed last week it may face a tax bill of up to $5 billion. But the company has enough money. Here's the bottom line. They have enough money to fight the IRS for a long, long time.
That is like craziness.
So that's the difference right there between, a mega billion dollar company who has a dispute with the IRS, who can afford to fight and can afford, teams and armies of lawyers to combat the teams and armies of lawyers on the side of the IRS, versus your average person who doesn't have those resources and can't afford to fight like that. And I can tell you, we're not going to do an offer on compromise for Facebook.
Because we're probably not going to win. So that's a time where it's the IRS train wreck of the week.
This is the segment of the show where we talk about somebody who came into my office and essentially their IRS situation was a train wreck. They were in big trouble, and we got them out of it. So in this story today, we had a young couple, and one was an electrician and one was a graphic designer. So these are not real high-income individuals. They're just sort of your average, run-of-the-mill, middle-class, kind of families. And they had managed to rack up a pretty good-sized tax bill. It was $50,396. And to your average family, that's a lot of money.
Indeed.
The installment agreement payment on that would have been somewhere around, I want to say, $750 a month. And that's 2 car payments for lots of families, isn't it?
What's their income kind of like? Just curious on that tax bill. Any rough idea?
Well, there's not a correlation. As I recall, their income was maybe somewhere between $60,000 and $80,000 a year. So you're not talking about
tax bill equal to annual income.
Yeah. And it wasn't a tax bill from 1 year. It was, as I recall, there was somebody in the family that had been previously self-employed and managed to run up the tax bill. So long story short, we filed what's called an offer on compromise. An offer on compromise is where you make a deal to settle for less with the IRS. And it's based upon a relatively simple math equation. But we went ahead and filed the offer. And because of some of the assets that they owned, our offer was $19,587. So this is not one of those 5 or 10 cents on the deal, cases that we talk about so often. This was something like 40% of the tax bill, but ultimately the IRS accepted $19,587. So pretty good deal for these folks.
Maybe you started too high, Darrin.
No, I can assure you I never start too high on those negotiations. It just worked out that way. But if you came into the office and said, Darrin, I owe you I owe the IRS $50,000, can we get it settled for under 20? Most people would be pretty happy with that result, and they were really happy with it. So the nice thing is that they're allowed to go on and live their life and move forward with things,
I know, because that's got to be hovering over anyone's head, having that kind of tax liability.
I can tell you, as having had tax bills almost, not every year, but for many years during my career, it's one of those things that just eats away at you at night. If you have trouble sleeping at all, that's one of the things that your mind is going to go to in the middle of the night. You're there in the dark and you're staring at the ceiling and you're like, how in the world am I ever going to get out of this hole that I've dug for myself? $50,000 in my practice is kind of a relatively modest tax debt. I have just as many $200,000 cases as I have $50,000 cases. So when the number is big enough for you as the taxpayer to not have any idea how you're ever going to pay it, then it's probably a pretty good idea to give us a call and see what your options are.
And you can reach Darrin at 888-GET-MISH. You can also get him online at getirshelp.com.
Don't forget the podcast on iTunes. Don't forget the app that is in the iTunes store and the Android store as well.
And what should they be searching for the podcast?
Look under IRS Solution Attorney or IRS Problem Solver. I'm not real sure if we've got it completely fixed, or you can just search under my name, Darrin Mish. That's DarrinMish. We're
trying to get the podcast to match the show there. So our special guest is going to close the show today. Go ahead and give out the phone number again to reach Darrin Mish.
888-438-6474.
Great job. And what message do you have for our lovely people listening today? We appreciate every single one of you.
Pay your taxes or Darrin will fix it.
What was that?
Pay your taxes or Darrin will fix it.
We're out.